Media recognition from Bloomberg, Reuters, recycling trade publications. Patented process for 100% recovery of critical metals, including cobalt, lithium, nickel, manganese, aluminum. American Manganese is focused on recycling lithium-ion batteries for electric vehicles. American Manganese trades on the TSX Venture, AMY, the US, AMYZF, and Frankfurt 2AM. For more information, visit AmericanManganeseInc.com or phone me, Larry Ray, at 778-574-4444.
You're listening to HowStreet.com radio, available online at TalkDigitalNetwork.com. Welcome to HowStreet.com radio, the online source for market opinions. Here is Jim Goddard.
My guest is Steve Saretsky. He's a Vancouver-based realtor. You can find him online at SteveSaretsky.com. Welcome back to the show, Steve.
Thanks for having me on.
Steve, has the latest issue of the Saretsky report been released yet?
Yeah. It's all out there, so it's on the website. So anyone that wants to check it out, I think this edition this month is 20 pages, and you can find that at SteveSaretsky.com.
So what's the latest on the Metro Vancouver housing market?
Yeah, I think that, it's still a market that's really, really strong. We kind of went through a bit of a summer lull there, which I think we've talked about on the show. 2-3 months ago, saying that you were likely to see a rebound in activity levels in September, which is part of a seasonal trend. But not only that, I think that, summer was unusually quiet just because of the amount of people, getting out of the house after a long time being pent up in the pandemic. And we've kind of seen that in the housing data showing up, right? So, yes, if you look at it, if you just look at the headline number, sales are down 13% in September on a year-over-year basis. So everybody says, wow, look, sales are dropping, housing market's slowing. But you have to keep in mind that, September of 2020 was an all-time record high ever for the month. So, yeah, we're coming off all-time record highs. But if you look at the overall sales activity levels, very high. I mean, for the condo market, for example, condo sales this month in September were record highs. So, and if you look at, what's happening with prices are actually still inching up. I believe the benchmark home price was up 0.8% from last month. So, it's a market that is still struggling with low inventory levels, across pretty much every segment. You're looking at about 2 months of supply on the market, which is indicative of a very strong seller's market. So until that starts to correct, until you get, months of inventory around 4.5, you're not going to see a decline in home prices. And so, that's really what we're looking for, moving forward.
Are all categories of properties still selling significantly over the asking price?
I don't know if I'd say that. I think that, if you look at the detached housing market, it's certainly not at the same level of strength as it was back in March or April of 2021 here. But, I think last I looked, I don't have the exact figure in front of me here, but I think the number of homes sold above the asking price is still hovering around 50%. So, 1 in every 2 homes basically going into multiple offer situations. And yes, that's partially is a result of realtors, pricing homes more aggressively for multiple offers. But again, you don't do that strategy unless you're extremely confident in market conditions. Underpricing a home for multiple offers in a balanced market is suicide. You just don't do it. So, the realtors are still able to get away with pricing these homes, slightly below what they're worth and letting, having 4, 5, 6 buyers show up to the offer table. So it's still a very competitive market.
What's the latest on high-end properties and who's been buying them?
Yeah, I haven't really been tracking the high end of the market, to be honest. It's not something I overly focus on. I don't think it's a segment of the market that's really that strong. There's not a whole lot of foreign investment today, at least in relative terms, to where, the market was in 2015, 2016. It's not the same market. It's not the same dynamics. And that's why we're seeing the majority of the housing strength is really in these entry-level price points, right? So, if you're looking for a detached house under $2.5 million, you're going to be competing. If you're looking for a condo under $1 million, you're going to be competing. Now again, yeah, if you're looking for a house, over $5 million, like, yes, it's a balanced market. You can go in there and you can negotiate, take your time. That's a very small segment of the market.
Has there been any sign with the Evergrande crisis in China that foreign property buyers here who may not live here are selling off their properties to help bail them out in mainland China?
None whatsoever. Haven't seen, haven't heard of anything like that. Watching, but haven't heard a peep.
What's happening with detached properties and who's buying them?
Yeah, it just continues to be driven by local end users, which I know is really hard for people to wrap their heads around, because if you look at it, you say, okay, well, as of right now, the detached home price benchmark sits at $1.8 million. How can locals afford $1.8 million? I don't understand. It really is, I think the biggest thing to sort of take away from this most recent housing bull market is the availability of credit, and the leveraging of existing assets. That's been what's driving this housing market. It hasn't been the foreign buyers this time around. The borders have been for the most part shut. And if you look at, the BC government's property transfer tax data, which I know there's a difference between foreign money and there's a difference between foreign ownership. But foreign owners made up about 1.2% of all transactions this summer across BC. So it's a very small number, at least as they're quantified. And so what we're seeing predominantly is just people that have existing assets in the housing market. So they've already owned a condo, they already own a townhouse. They're leveraging that up to buy a detached house with $700,000 of equity already in that property. You're seeing parents co-signing en masse to help people get into the housing market. So those with existing wealth, those with existing assets are able to participate in this housing market, and unfortunately those without are not. And I understand that's going to create a lot of societal friction and a lot of societal problems, but that's just the system and the era that we're in today with, this unlimited QE, money printing, low interest rate environment. It's those with assets, those with the, availability of credit, those with good credit scores are able to obtain this, and those without are not able to participate.
How important is the bank of mom and dad when it comes to real estate?
I would say that from my experience, I work with all sorts of clients, and, over the last 7 years here, it's been, I would say, if I had to, it's not a perfect number, but I would say from my experience, 9 out of 10 first-time home buyers, are getting help from parents, whether that's a gift, whether that's a loan for a down payment, or whether that's a co-sign. To qualify for a mortgage, I would say on the low side, it's 90%. So getting back to my earlier conversation about, those with assets, i.e. your parents, have been on the housing ladder for the last 25 years and have accumulated massive sums of home equity, are able to help their children get into the housing market. And it's a huge driver. It's getting talked about now, but it really is, the haves versus the have-nots.
What's happening in the condo market and who's buying them?
First-time home buyers, obviously just a leg up. What we tend to see is in every housing cycle here, the detached housing market starts to go up. People get priced out. They then go down to the townhouse market because that's the next best alternative. Townhouse prices go up. People get priced out of townhouses. They look for the next last alternative, which is condos, and then condos go up. And so, you can start to see the data here, right, as we talked about at the beginning of the show. Detached home sales slowing, townhome sales starting to come off record levels. Oh, and now it's the condo sales that are hitting record highs, and the prices that are starting to accelerate higher. So, it's first-time home buyers really ultimately competing with investors. We're seeing the investors are back, to the table. They started to return at the end of last year after really hitting the panic button for about a good 6 or 7 months at the onset of the pandemic. They have since returned, obviously seeing the rental market, not only stabilizing, but strengthening. At the same time, the cost of capital is 1.5%. Inflation just came in at 4%. a pretty attractive investment for investors, and they're just continuing to pile in.
Where does a hot condo market fit in the real estate cycle?
Well, I mean, yeah, we tend to see it sort of, I guess, towards the end. I mean, I don't know how you say the end, or just, like I said earlier, detached up first, townhouse second, condos last. If you recall, in 2016, the detached housing market peaked in the spring of 2016, pre-foreign buyers tax. Then the foreign buyer tax came in August. The housing market as a whole tanked for 3 months. The detached housing market then, went down / sideways for several years, while in 2017, the condo market ripped 30%. So, as of right now, I mean, I don't know if I'd be quick to say that detached house prices are flatlining or going down. They're still going up. So it's really hard to determine where we are exactly in this housing cycle at this point.
CMHC said most Canadian real estate markets were reaching a risky stage, but Vancouver was left off the risk list. Why would that be?
I mean, I really don't put any stock into what CMHC says, to be honest. I mean, I think that the paper that, the reports they put out, aren't worth the paper they're written on. It's just, a bunch of PhDs sitting in an office that, haven't, been on the ground and actually even engaged with a buyer or a seller, and it's not reality. I always laugh because one of the markets that CMHC always puts out in the report, they say, at risk of a housing correction, one of the most vulnerable housing markets is, Calgary, Alberta. I mean, Calgary, Alberta home prices haven't moved in 13 years. I mean, I don't know what risk of overvaluation there is there. If I look at Calgary, Alberta, the housing affordability index is, it hasn't been this good in 20 years. So, and then they come out and say, well, Vancouver and Toronto are fine. Meanwhile, prices in Vancouver and Toronto have doubled in the last decade, where price to income ratios are obviously completely distorted. So, yeah, I just don't look at CMHC reports. I have not found them to be a good source of information. I find that the rental data is junk. It's just, they should stick to insuring mortgages, is my opinion.
Mm-hmm. Well, I once heard that an economist is someone who has never met an average person but has had one described to them.
Yeah. Yeah, I mean, I don't get me wrong, I have some economist friends that I love to death, but, the industry as a whole, I think just has a reputation for, it's again, like, you hire all these brain trusts there, you put them all in a room, you pay them a government salary and pension, they sit there, they pontificate about the market, and hey, I would be the first to admit, back at the onset of the pandemic, I thought they were right, but they were putting out the public forecast of home prices were declined 9 to 18%. Keep in mind, these guys probably have more data than anyone. I mean, they've got access to all the banks and their books, and they know, CMHC knows what their insurance portfolio looks like, and the fact that, their housing forecast was, not only were home prices not down 9 to 18%, I mean, they're up more than 20. So, that's a 40% swing that they missed. So it just goes to show kind of how hard it is to sit there and try to forecast, financial markets, particularly when you've got central banks coming in and, pumping billions and billions and trillions of dollars of liquidity. And, anyways, that's my opinion. Let's ramble on.
We'll have more with Steve Saretsky right after this.
Don't miss out. Stay informed. Receive the HowStreet.com weekly recap with thought-provoking podcasts, radio, and articles delivered to your inbox. Sign up for the HowStreet.com weekly recap on our homepage at HowStreet.com.
Welcome back. We're speaking with Steve Saretsky. Steve, we're seeing inflation, hearing about stagflation. How are inflation and possibly stagflation likely to affect housing markets?
Yeah, I don't know. I mean, it's a tough one. I have some, opinions. That's all they are, is opinions. I mean, like I said, I'm not going to be CMHC here and make any, forecasts because I'm happy to be proven wrong. But, Yeah, I look at it and think that, I think that a lot of the transitory narrative is probably, garbage. But I look at it and say, I think that central banks want inflation. I think that inflation is good for, a global economy that is suffocating under debt to GDP, which sits at 365%, all-time highs. How do you get rid of that debt burden? Well, you try to inflate it away. And, you try to inflate it away while hopefully keeping the bond market in check and keeping rates, pinned on the floor. So my personal opinion is I think that, inflation, whether that shows up in the CPI or not, is going to persist, higher than we're used to over the past decade. And, I think that rates, will be manipulated by the central banks. Like, for example, I know people are calling for the Bank of Canada to start hiking interest rates, and I don't think they're going to. I think they're going to be very slow to do that. And so, I look at that and say, okay, well, if I can go out there today and I can take on, a fixed today, if you talk to the right people, you get a 5-year fixed mortgage at 2%. If inflation's going to run at, 3.5% for the next decade, that's a real negative carry of 1.5%. So I think that bodes well for hard assets. But, don't get me wrong. You still have to buy selectively. I think that if we look at a lot of the housing market, it's pretty toppy. If you're buying out in the Fraser Valley where detached home prices are up 38%, there's always a risk of a correction there. So, but I think hard assets, in an era moving forward of continued, money manipulation, I think will do well.
Mm-hmm. Are mortgage rates starting to rise?
Yeah, the fixed now is up. I just said 2% if you talk to the right people, but for the typical person trying to borrow a 5-year fixed, you're probably looking at about 2.2 today. So certainly an increase is still low when you consider inflation sitting at 4.1% officially, which is, again, it's probably arguably higher in real life. Now, the variable, right? And the variable hasn't changed. I was offered this past week a variable rate mortgage at 1.25%. So, if you're going to give me money at 1.25% and you're going to let inflation run, 4+%, it's a pretty compelling opportunity. But again, I think you have to be selective. You have to be careful. There's always, do I think the Bank of Canada can hike rates marginally? Sure. But I think the last cycle the Bank of Canada got to, I think it was 1.75% on the overnight rate. Now we add on the debt levels that we've accumulated since, particularly since the pandemic, where, governments and everyone's just levered up to their eyeballs. How far is the Bank of Canada going to get in the next rate hike cycle? 1%, 1.25. So there's not a whole lot of room for these guys to go, and nobody wants to admit it, but I think that they're cornered.
Is there an inverse relationship between interest rates and home prices?
Well, I think that most people buy a payment. People are buying payments. They're not necessarily buying a house. They're buying a payment. And so, with low mortgage rates, obviously that adjusts the payment. So, I think everybody's well aware mortgage rates today on a 5-year were not 2%, but they were 4%. That house prices would definitely be coming down. There's no question about that. So, it's when you have a market that's as levered as it is, it becomes highly sensitive to interest rates. And now you can think about housing on one hand, and now you can do the exact same for the global economy. When you have a global economy that's as levered as it is, it becomes highly sensitive to interest rates. So, hence my view personally that, central banks around the world are hamstrung.
Also, a factor that I don't hear many experts talk about is the longer you own that home and have been paying your mortgage on it, the less you owe the next time you have to renew your mortgage. So even if rates go up slightly, you could end up paying even less a month, even though the rate has gone up.
Yeah, I think one thing to sort of factor in as well is that, with these low rates, like 2%, whatever, sub 2, from day one, you're paying off like 65% of your initial mortgage payment strictly goes to this principal pay down, which is historically the highest it's ever been, right? So, now in an era of negative real interest rates, in an era where you get 0% on your savings, in fact, you're actually penalized under savings, through inflation, that the principal pay down component becomes, so compelling that it almost acts as a savings account, essentially. It's like the new modern day savings account. It's sometimes hard to wrap your head around, but that's what a lot of these like condo investors are thinking. People always go, "Oh, these guys are nuts." They're buying a condo in Vancouver and they're losing $300-400 a month in negative cash flow. Which again, I'm not a proponent of, but when you start to really look at the numbers, you say, okay, well, they're also putting $1,000 a month towards a principal pay down here. So it starts to look a little bit different, and that's why you have, I think, a lot of these distortions, right? I mean, some of these prices are very high. They don't quite make sense from a price to income ratio, but, not a whole lot of things in the financial markets today make sense when you have, these negative real interest rates around the world. You've got, junk bonds in the Eurozone, with real negative yields. Like, there's all these distortions because of, like I said, the money manipulation.
Yes, I've always looked at a mortgage as an enforced savings account. Also in that argument, mortgage versus renting, at some point you no longer pay a mortgage and you have all that equity built up. And even if you've only owned something for 4 or 5 years, you still have some equity. So when you leave, you get some money if you sell it. When was the last time you rented and got money back?
Yeah, I mean, obviously I'll even though I'm a realtor here, I'll always play devil's advocate and say I'm willing to look at the other side, which is that, you can certainly take that $300,000 down payment and invest it in, a dividend income producing stock, and there you go. But at the end of the day, I always say it's a personal preference. I think that real estate in an environment where interest rates or mortgage rates are so low, I think is a compelling investment. I think that, part of a diversification is, I think, again, when we look in this, what I think will be a decade of basically financial repression, that hard assets, where I don't care if that's gold, I don't care if it's real estate, or commodities tend to outperform.
I know, I think I might have asked this question before, but I'll ask it again. Are you seeing any fallout from China's Evergrande crisis in Vancouver yet?
I haven't seen anything. I know there's lots of people talking about it and watching with bated breath here, but I really haven't seen anything. There's no flood of listings, pre-sale condos are still selling well. The high-end luxury pre-sale market, which was predominantly offshore, you're asking $2,500 plus a square foot. Yeah, that market is still slow, and I suspect it will continue to be slow because I don't think there's a lot of demand right now from overseas investors.
You tweeted North Vancouver to become the world's first city heated by Bitcoin. What's the story there, Steve? It sounds like you got a scoop.
Yeah, I'm not a Bitcoin expert here per se, but I know that North Vancouver has been fairly forward thinking in terms of their, green mandate, green energy. So they've partnered with a company here that is going to basically be running that you're going to be delivering heat to 100 residential commercial buildings using digital boilers, which will recover, quote, more than 96% of electricity used for Bitcoin mining. So apparently it's the first of its kind in North America. That's about all I know at this point. I think it's a pretty early release, but.
Well, we know Bitcoin takes a lot of energy, and every time you see a Bitcoin mining operation, they have huge coolers attached to their servers to cool them off. So why not put that heat to good use?
Yeah, exactly.
Are you a buyer or seller of real estate in this market?
I mean, I guess both. I just bought a primary residence here, in an area that we like. So, I think we got a pretty good deal given where the market's at. Again, I think there's always opportunities in the real estate market. I think the one thing that is unlike maybe the equity market is that there's a lot of inefficiencies. You have maybe some less, some sellers that need to sell for whatever reason. You get, bad marketing that doesn't promote a property. You get maybe realtors that don't know the market as well, that underprice things, stuff like that. So, and then, we're looking to sort of, I've got a project that we're finishing up here, that we'll be selling. So, a little bit of both.
During the election, some politicians said, we'll help with housing affordability. I haven't seen any action there. Some blamed foreign buyers for high prices, but as you've pointed out, foreign buyers probably haven't been a factor since 2017. What can be done by government to make houses more affordable, or homes?
I really don't think it's a simple solution. I think that, really it comes down to the cost of capital and the availability of credit, is the biggest driver of home prices. So, I think so long as, I always say this, it's very, very simple, but hypothetically, if people got 4% on a GIC, how many, would you still have the same number of real estate investors? My guess is probably not. If you could still get, 5% on a government bond, you're probably not having, mom and pop owning 3 condos. So I think that's the biggest one, because again, when you push rates to zero and you induce a housing bull market, you're going to attract more and more real estate investors, people that otherwise probably wouldn't have invested in real estate or owned a second or third condo are doing that, and that becomes harder to build enough housing for that demand. Now, I do think that we are still underbuilding housing, partially for that reason. And so government, I think, is part of the problem. Municipalities needing to get out of the way, to allow density, right? I mean, it takes the fact that it takes, start to finish, minimum 4 to 6 years to get a condo project built, in the lower mainland is way too long. And that's certainly part of not only the developers' holding costs that get passed through to the consumer, but also just the lag time to basically play catch up.
Is the permitting process a virtual nightmare?
Yeah, I just think it's just a nightmare in general, right? I mean, even if you're trying to build, even if you're trying to do a renovation just to get a standard building permit, you're sitting there for 3 months, right? That's just additional costs that everybody has to sort of eat, because of this inefficiency. And, start to finish, for a single family house, you want to build a single family house in the city of Vancouver. I mean, it's about 12 months now for a permit. I mean, close to it. So you're waiting a full year just to, allow a normal house to get built. I mean, why can't that be 3 months? So I think that's certainly part of the problem.
Yeah, I think the Taxpayers Federation told me that Canada is something like 62nd in the world when it comes to approving projects to get things done.
Yeah, I think we're, I actually have the stat here. Canada ranks 34 out of 35, OECD countries in the length of time it takes to get a general construction permit approved. So, we're 34 out of 35. And these are the same bureaucrats that are telling you they're going to solve the housing crisis. So I don't have a lot of faith that a whole lot is going to change. I think that we can certainly still have a housing correction, from an external black swan event outside of Canada that, filters through here. But in terms of the government actually coming in and fixing the problem, I don't think is going to happen.
Well, Vancouver's solution to any problem seems to be to hire more PR people to deny that there's a problem.
Yeah, it just doesn't really matter who gets in and who gets elected and what people say, because, it's, I think it's a systemic problem that's greater than one person.
Steve, how can people get in touch with you and get the latest issue of the Saretsky report?
Yeah, best just to email me. It's steve@stevesaretsky.com. Also pretty active on Twitter at Steve Saretsky. So it's probably the best two ways there.
So you can find him on Twitter at Steve Saretsky. His website, stevesaretsky.com. Steve, thank you so much for chatting with us.
Thanks for having me on, Jim. Appreciate it.
My guest has been Steve Saretsky. He's a Vancouver-based realtor. If you have any questions for Steve, I'm sure he'd be glad to answer it for you if you sent it to info@housestreet.com. Our YouTube channel is Talk Digital Network. You can find us on Twitter at House Street. We're also on Facebook. I'm Jim Goddard. Thank you for listening.
Comments made on HowStreet.com radio are an expression of opinion only and should not be construed in any matter whatsoever as recommendations to buy or sell any financial instrument at any time. Available online at TalkDigitalNetwork.com. HowStreet.com radio is a production of House Street Media Incorporated.